morning, everyone. Thank you for attending our third annual Washington Technology Industry Association and Washington Department of Financial Institutions Town Hall. This year, the event is focused on the state of blockchain and fintech in Washington state. I am going to start that. Excellent. So here is our agenda for today. First, I will run through our session goals, and then we are excited to hear from some of the key sponsors of our WTIA blockchain efforts. And then we'll walk through the work that WTIA is doing in the blockchain space, followed by our partners at DFI to talk about their efforts. I also just realized I forgot to introduce myself. My name is Brittany Jarno. I am the Public Policy Manager here at WTIA. So we have left ample time at the end of our schedule to hear from you. Please put your questions in the Q&A or chat function, and we will do our best to get to your question following all of the presentations. As for the session goals, here they are laid out, but generally we are hoping for folks in the community and you all in the audience to see this event as an opportunity to make connections with staff from a key state agency and learn about the efforts to support the fintech and blockchain sectors in Washington state. So to kick things off, first we'll hear from two of WTIA's key supporters, key sponsors of our blockchain activities. We really appreciate the support of these partners. First up is John Bender. He is AAN attorney from the Seattle law firm Core Cronin. Over the past 2 decades, Core Cronin has established itself as a premier litigation firm in the Pacific Northwest. They credit their success to their commitment to treat their clients' problems as their own and by providing the most cost-effective services to their clients to solve their legal problems. Their clients include some of the largest technology companies that call the Pacific Northwest home, as well as startups and entrepreneurs who are committed to building something special. Now over to John to speak about the regulation landscape in Washington state and the importance of state agency partners.
Well, thank you so much for the warm welcome and good morning, everyone. I'd like to first express Core Cronin's gratitude to Ari, Brittany, Eben, and everyone at the WTIA and the Blockchain Council for inviting us to say a few words before we get started. It is no secret that Washington state and the Pacific Northwest has become a hub for innovative fintech companies, many of whom are breaking new ground every day, and how blockchain can be used to provide real, tangible benefits to consumers, businesses, and even society as a whole. I think I can speak for all of us in saying that the growth of this space in the region has been really exciting to watch over the past few years. And the businesses and entrepreneurs leading this effort deserve a ton of credit for, in many cases, daring to innovate when the regulatory landscape here, and especially nationally, has been, let's just say, less than clear, and even perhaps frequently shifting beneath their feet. In my view, Washington's continued status and growth as a leader in fintech and blockchain over the long term will require the industry to continue to strengthen its partnerships with state agencies like DFI, especially as the legal and regulatory landscape in this state and across the country continues to crystallize. We are fortunate in Washington to have a regulator in DFI who I believe appreciates the benefits of fintech business models and is willing to develop and promote creative ways to support the industry. While there are many aspects of quote unquote good regulation, there are 3 that come to mind when one thinks of DFI. Those are acumen, engagement, and transparency. First, acumen is important because DFI is a very complex job. It must balance promoting innovation with consumer protection. DFI has an important role in a healthy marketplace. And to do this job well, it must understand not just what the law says, but it also must understand the businesses it regulates. We are fortunate in Washington to have in DFI a regulator that has demonstrated a deep understanding of both the impacts of the law and the realities companies are facing on the ground. DFI has frequently used this acumen to try to ease burdens companies operating in this space might otherwise face. Second, engagement is important because without engagement, the conversation tends to be one-sided. People become siloed to a specific point of view or interest. DFI's leadership has proven itself willing to spend the time and resources to engage with this community in order to understand the challenges companies face. Its participation in annual events like these is just one example. Another is DFI's Center for FinTech Information, which provides a wealth of resources to startups and companies who want to learn more about the regulatory requirements that apply to them. DFI also has a track record of coordinating with other states in order to make things easier for businesses operating from this state to expand to others. Third, we all know that transparency is essential for businesses to be successful. Everyone here likely knows this from their own experience. Regulation drives outcomes in the marketplace. Businesses need clear rules of the road so they can grow and succeed. Growth is inhibited when the rules themselves are unclear or if they are enforced unfairly. DFI has shown a commitment to this as well. DFI has shown that it understands the pitfalls of a one-size-fits-all approach or an approach limited solely to regulation by enforcement. In all of these areas, DFI's leadership has shown they are committed to doing what they can to support the region's fintech and blockchain space. In my view, DFI has done an excellent job bringing its acumen to bear to support and engage with the industry and committing to being transparent about the important work it is doing and the laws it is tasked with enforcing. I'll close by saying that I'm very excited today to hear from DFI about its current perspectives on the continued growth of this sector in the region and what we can expect to see from DFI next year and thereafter. Thank you.
Thanks so much, John. Up next, we have Joe Cutler. Joe co-founded and co-leads the Seattle-based law firm Perkins Coie's nationally recognized fintech and digital assets group. He is known for his extensive knowledge of the blockchain and cryptocurrency regulatory landscape and provides workable solutions for groundbreaking projects in this sector. He also draws on broader expertise in financial privacy, financial services compliance, and financial crime prevention in the fintech space. I will now pass it on to Joe to provide insights on how he sees the national regulatory environment evolving and how current and proposed regulation may impact companies in Washington State.
Thanks, Brittany. It's good to be here, and we're grateful for the DFI and the WTIA for putting this together. We used to do the Washington DFI Day in person. Hopefully we can get back to that soon, but we can be grateful we can come together and talk about these important issues. A little bit of just really brief background. I've been in the space for I've been in practice for 18 years and have been in this space since 2013 when blockchain was talked about mostly at bars around 23-year-old kids who were trying to get into the space doing something totally crazy that no one understood. And fast forward a decade and this has really grown into a fascinating industry. Here at Perkins Coie, our fintech and blockchain group started as a little huddle of 3 or 4 people that had been bitten by the Bitcoin bug, and it's grown into a 70-person strong group that covers a range of disciplines. And today I'd like to talk a little bit about sort of the national environment regulatorily and also just sort of how the national regulatory environment affects, implicates and is moving this technology. There really are sort of 3 major major areas of focus at the national level. The one that gets the most attention, obviously, are the securities enforcement actions that have been kind of rolling forward apace. With about every quarter or so, the SEC rolls out another enforcement action, as it has done for several years. These enforcement actions are shaping by regulation by enforcement the notion of what blockchain technology is when it implicates replacement of the current markets as they currently function. But before I go into that, though, I want to make a point, which is that blockchain technology itself is much larger than just financial services. The blockchain technology and the excitement around it is a foundational change in the way that we approach the whole realm of transactions generally. And in the same way that the internet, by changing the way that we pulled information into hard media like tape and cassettes and media, and turn it into packets of data that could move fungibly across the internet, revolutionized communications, the ability to remove intermediaries and deal directly with one another over a consensus-based decentralized platform is going to revolutionize the way that we think about the realm of transactions. And I don't just mean financial transactions, I mean any kind of transaction, a supply chain transaction, an identity verification transaction, your health records, and how you transact at the doctor with giving them your information and documenting it across the various providers, and of course, financial services. And as that revolution takes place, and as that technology starts to replace some of the current incumbents, there's some friction. And regulators, who are tasked rightly with protecting people pursuant to the regulation, have grappled with how to apply regulations that generally apply to intermediaries to a new technology that removes those very objects of their regulation. As they've done so, it's been hard to know how to do it. So the national government has regulated in three critical ways. One, it's regulated securities by imposing regulation on objects like tokens and different kinds of cryptocurrencies when they're used in a financial market to replace the movement of money. The Treasury has regulated OFAC through OFAC, which is the Office of Foreign Asset Controls, when we use this technology to have access to markets that normally sanctions would prevent us from accessing, like Iran or Cuba or other sanctioned parties. And FinCEN has brought enforcement actions when these companies who are using blockchain technology to move funds for people don't follow their traditional requirements of anti-money laundering controls and knowing your customer and protecting the assets as they go forward. And so the national scene is really focused on protecting the functionality of financial services as they apply to this technology. And we're seeing some of the strain of what happens when we roll out new technology. Entities like Celsius and Voyager have struggled to maintain their assets, and a lot of consumers that invest in them have largely, as they've come under scrutiny for the fluctuations in value and not being able to protect the assets, they've come under a lot of public scrutiny for possibly declaring bankruptcy or losing customer funds. And so some of the very old tools that the government has, securities regulation, bankruptcy laws, FinTech enforcement laws through OFAC and FinCEN, are being applied to these technologies. How it is going to play out in the future is a really interesting question that I hope we have time to talk about throughout this seminar. In my opinion, it really boils down to one very important question, which is, when you have a whole body of laws that are aimed at those entities that stand in the middle of two parties engaging in a transaction, what do we do when a technology comes along and replaces those intermediaries and removes them for a direct peer-to-peer transaction? Does the law then apply to the participants? Does the law apply to the makers of the technology and not the intermediaries using it? Or does the law simply not apply, and people can use the technology freely in a very decentralized, almost libertarian way? Those questions are all being debated hotly through some of the federal actions that you can look up and read more about. The Ripple case is deciding whether or not tokens really are securities and what context they are. The recent action against Bittrex by FinCEN and OFAC has demonstrated that this technology is still subject to the age-old rules about AML and KYC, and you have to run your financial service business with all the protections that one would expect if you're acting as an intermediary in a traditional financial transaction. And the CFTC's action in UkiDAO is testing some of the most basic theories of legal principle about what an entity really is. When they can serve a decentralized organization that has no head over a chat board and claim to have served an entity, you're really in the realm of total science fiction legal work. And so as a legal practitioner, I'll close with this. It has been the most fascinating 10 years of my legal career to watch this technology upend the very notions of what we think are foundational principles of the law, test the limits of how regulators can do their job, and push what we expect of technology as it's beginning to slowly replace some very, very, very old institutions. And I'll completely agree with John Bender in that my interaction with the DFI over those 10 years has been one in which I have been very impressed at the DFI's willingness to A, understand the technology better than other regulators generally do, B, regulate fairly, openly, and with an open ear to understand how their regulations actually affect the businesses, and C, engage in organizations like this, where or activities like this, where they engage with industry. So I would encourage anyone who's listening who is a business or an industry participant to don't be bashful to pick up the phone and call them. My experience has been that they do answer the phone, and that they're always willing to learn and grow together and to engage in this space in a collaborative and cooperative way. Really look forward to what they have to say, and for us, we're just here to listen and participate as we can.
Thanks so much, Joe. And thank you again to Core Cronin and Perkins Coie for their sponsorship of WTIA and our blockchain work. Now on to the meat of our event today. Again, if you have any questions, please feel free to post them in the chat or Q&A function, and we will look to respond to them following this discussion. First up, I will give a brief overview of WTIA, and then Ari Yu, founder and chair of both the Cascadia Blockchain Council and the US Blockchain Coalition, will speak about the landscape here in Washington State and some of the ongoing efforts to support the blockchain sector. So WTIA, overview, Washington Technology Industry Association. We are a consortium that includes a not-for-profit member trade association, a not-for-profit national tech apprenticeship intermediary, and a for-profit corporation delivering business services. Our mission is to foster a robust, equity-centered tech sector that supports thriving communities. We are doing a lot of work with Ari and others in the blockchain space. You will learn more today about the Cascadia Blockchain Council, the US Blockchain Coalition, our Advanced Technology Cluster, and then our work to help establish a blockchain work group for the state. With that, I'll turn it over to Ari to give a brief overview.
Awesome, thank you. And thanks again to both Core Cronin, John Bender, and Perkins Coie, Joe Cutler. Really appreciate everything you do for our community and your sponsorship for today, because this is a really important gathering that I think we do every year, and hopefully we'll continue to do every year, bringing the public and private sectors together in conversation and information sharing. A lot has been going on in this place, as you know, if you've been watching the media, but here in particular, in the Pacific Northwest and Washington and specifically, there's just so much going on, and we've had a lot of good luck and also good relationship building, kind of just give us rewards and opportunities to make a difference in the space. In Washington State, as you know, we started this Cascadia Blockchain Council back in 2018 because Washington State is very, very uniquely positioned. Not yet, don't skip slide yet, because we are a hub for cloud technologies. We're a hub for platform technologies. We have Amazon and Microsoft. We have a whole bunch of practitioners and subject matter experts when it comes to data and privacy and identity and beyond, right here in our Pacific Northwest, right here. On top of it, you know, as many of us know, we enjoy the oceans and the mountains and the evergreen trees and the whole wholesome culture of being in the Pacific Northwest. One thing I've learned over the past year is that Washington State is a hub for Bitcoin, blockchain, and crypto companies because of its adjacency and access to technology talent and just technology history. And so that's something that is really unique to Washington compared to any other state, and something that we should really, really continue to culture and cultivate and just nurture as much as possible. Since founding and coming into Washington State, we've made a lot of progress, right? We've built a lot of strong relationships with the DFI, and just meeting everyone that works in the DFI has been a really, really great experience. And so you'll hear this over and over as we speak. It's a very, very open agency. They're very transparent. They're very friendly and kind and warm-hearted people. And so, you know, we have now the Center for FinTech Information, the CFI. We have this blockchain work group that's about to kick off. Really excited about that. The Department of Commerce has granted us this Advanced Technology Cluster Program, also focused in blockchain. And we have even further opportunities for additional funding and just resources here in this region. But we also know that entrepreneurs, investors, exchanges, startups, we all want to be compliant. And we also want to make sure that we're managing our costs and focusing all of our resources into innovation and our jobs and hiring. Next slide. So to the Cascadia Blockchain Council, we were founded in 2018 because I had just come out of a startup and traveled the world and seen all the different blockchain and crypto conferences and thought, you know, we need to put a lot more attention and coordinate and bring people together specifically in the state and in this region because of all the things I mentioned before. We have all the talent, we have the history, we have the enterprise and the consumer companies. There's just so much opportunity for us to not bring attention and focus on that. And so the WTIA Cascadia Blockchain Council was created around that. I'd also like to point out that one thing that wasn't mentioned around the WTIA is that the WTIA is the largest technology industry association in the US. I mean, like 10 times or more larger than most industry associations around technology. And so by partnering with technology, what we're doing is breaking down these silos. You know, we want to make sure that we take advantage of all that WTIA has created and built in terms of relationships and influence and resources and learnings over the years. And so that's why the Cascadia Blockchain Council was built and also is incubated within the WTIA. Our top focus is building those public and private partnerships. And that's why, again, we're having this DFI Day. And if you'd like to participate, you'd like to be a part of the conversation, you'd like to be available for testimonials in the future, we do these bus rides onto Olympia for just education days and testimonials. So I'd highly encourage you to reach out to myself or Brittany if you'd like to be involved. You can also find out more information on our website, which is right there. Next slide. US Blockchain Coalition. blockchaincoalition.org if you'd like to see more information. We actually started this back in 2021 because May of that year, I reached out to Lee Bratcher of Texas Blockchain Council and I asked him, hey, what are you guys doing differently in Texas? Is it because you're a super Republican state, or, you know, what are you guys doing differently? And we realized very quickly that this was the first time that we were having such a conversation state to state. And so 3 days later, we had 10 states on a call, trading notes about policy and blockchain, Bitcoin, crypto. And that was like California and North Carolina and Wyoming. And then literally 30 days later, we had over 30 states on a call, and we've been meeting monthly ever since. And it's really, really made a huge difference when just coordinating ideas, legislative drafts, relationships, having Democrat policymakers in one state talk to Democrats and policymakers in another state. We're just continuing to move forward. So if you'd like to learn more, it's really, really important. We started with maybe 30-ish states earlier last year, and now we're up to about 40-ish states right now. And we're collecting and connecting with more states each and every week. The vision is around building a future with a uniform regulatory and policy framework that empowers individuals, protects privacy and intellectual property, and services the needs of people, companies, and institutions. And we do that through policy analysis, development, and advocacy. We lead promoting adoption of intelligent policies, applications, and systems. We have lots of things that we've created. Recently, we had a policy conference where we had highlighted some highlights and lowlights of learnings of some key states: Washington, California, Texas, North Carolina, Wyoming in particular. So if you'd like to see that recording, reach out, because we have that recorded. It's a good set of information. We're working on a use case showcase and catalog. Very often when we're talking to policymakers and entrepreneurs and investors, people are looking for those use cases, and most of us don't have those at our fingertips. And so we're putting that into a catalog, and we'll be releasing that early next year. Another thing that we're doing is a economic impact study of digital assets. Very often when we're talking in the space, there's a lot of opinions and ideas, which are all really great, but we need data to back that up. And so, working with the WTIA, again, an incubator, because it is the largest technology industry association in the US, the US Blockchain Coalition is working on that economic impact study, and that'll be released early next year. And so if you'd like to be participating or sponsoring that, please reach out to us as well. Next slide. Brittany.
Yeah, so I'll hop in here. So as Ari mentioned, the Washington State Department of Commerce has this program called the Innovation Cluster Accelerator Program that builds off an economic development methodology to convene all potential stakeholders, startups, enterprise, academia, investors, government, any and all stakeholders to help grow an industry sector. They have had successes in programs with the maritime industry and others, and so WTIA was successful in receiving one of these grants that we are using for our advanced technology cluster. We are focused on helping the blockchain and quantum computing sectors. And so our goals are to convene stakeholders to power growth in both of those sectors, map the current ecosystem in Washington State, attract and accelerate new business, build a diverse workforce, and advance supportive policy environment here in Washington State. You can check out more on our website. If you have any questions later, Nick Ellingson, who helps run this program, is also on the line, so he can help answer. And then finally, the Washington State Blockchain Work Group. So during the 2022 legislative session, we worked with Senator Brown and other key champions in the legislature to pass Senate Bill 5544. It establishes a blockchain work group, which is a foundational and important step to facilitating the growth of blockchain in Washington State. It will bring together key agency officials across the entire Washington State government, industry representatives, and equity stakeholders and it will recommend policies to facilitate responsible growth of blockchain applications here in Washington State. If you're wondering why we needed a work group, our thought was this would have been an initial recommendation coming out of our cluster work. It has also been proven to be a successful model for advancing supportive and consensus policies in other states, California and Texas and some of those leaders on blockchain policy. As Ari mentioned earlier, it will be managed by the State Department of Commerce and will be up and running soon. And we're really excited to have DFI and other state agencies be part of that.
Yeah, and it looks like we're on track to get this kicked off this year. So I personally am, and I know the community is really excited about this work group. I think there's a lot of opportunities for us to do education and just level setting, because there's lots of different definitions and understandings of this space. And so really excited to get this kicked off and really appreciate the support of the Department of Commerce and all the work that we do. I'd say if anybody in the community wants to stay in touch or get updates, reach out to myself or Brittany or Nick or anybody in the space, because we'd love to, continue to keep you up to date. And if you have ideas as well or suggestions, I think feedback from the community and those that are in the trenches working day to day in the space, the true practitioners, having your voice and your feedback and your insights into what are the specific challenges or opportunities that you see in front of us, would really love that feedback. So, don't hesitate to reach out. And then, we're about to have this presentation from the DFI, the team there. And, I hope you'll enjoy it as much as I did just looking through their slides. I'm really excited to hear them speak. I think there's a lot of insights that they bring to the table. I think there's a lot of work they're doing proactively to help our region stay on, top of mind and also a top choice for entrepreneurs and investors. And I hear it over and over again, which has been a really encouraging talking to entrepreneurs. We were just at Bit Farms last week doing a Bitcoin mining tour and hearing from them directly, hearing from the president and also their miners there that, Washington State in particular was a key strategic choice and they will continue to build and invest in the state was really, really encouraging. So, the more we get out there and we talk directly with entrepreneurs and investors and folks, I think the work that the DFI and what we're doing here in Washington State, it's really, really showing, and I'm really excited. So thank you.
Thanks so much, Ari. And as she mentioned, up next, I will turn it over to Ollie Higgs, Director of Regulatory and Legal Affairs and Center for FinTech Information Lead at the Washington State Department of Financial Institutions. She and her team at DFI will provide an overview of the CFI, current FinTech regulations in Washington State, and some proposed changes. Thanks so much, Ollie.
Thanks, Brittany, and thanks, Ari and the WTIA for having us come speak today. I also want to thank the introductions, John Bender and Joe Cutler, great comments, and we appreciate hearing from you as well. So I just wanted to give, one of the things we want to talk about today is what we're doing at the Center for FinTech Information. Just highlight that for your group, that we are a resource here for anyone who has questions about FinTech or many other subjects that we can talk about today. My name is Ollie Higgs, and I'm the Director of Regulatory and Legal Affairs, and I will be introducing my other panelists as we go through. So next slide. Okay, so DFI, for those of you who don't know, what do we do? Who are we? First of all, we license and regulate, and we license and regulate a myriad of financial institutions. Those are all listed here, the normal ones: banks, credit unions, payday lenders, et cetera, et cetera. One of the other mandates we have is to protect consumers. That's one thing that we spend a lot of time on, is consumer protection. And then education and advocacy, really, or providing information to people about what we do here. So next slide. So I wanted to give a quick background on kind of how we landed here. And so this is just a really brief summary of what we've done in the past, 8 years. So in 2014, cryptocurrency was regulated under the Uniform Money Services Act in Washington. We were a leader in that space. We were one of, I think, the first state to do that, to regulate cryptocurrency under the Money Services Act. And then in 2017, we created internally a DFI FinTech work group. So the banking people do banking things, the credit unions people do credit union things. And so what we did is we created a work group internally so we could all be talking and sharing and understanding what other divisions are doing. And then in 2019, we collaborated with the WTIA to identify the needs of the industry. And then in 2021, we created the Center for FinTech Information, and we also launched a pretty expansive website in 2021. So now we're here in 2022 giving the WTIA DFI Day. Next slide. So like I said, my name's Ollie Higgs, and then these are our speakers for today. We're going to have Nathan Quigley. He's in the Division of Securities. We also have Charles Moore. He's in the Division of Consumer Services. He deals with all of the applications, particularly in the money transmission space, for money transmission, essentially. And then Devin Phelps is the Chief of Regulatory Affairs, and she's in the Division of Consumer Services. So that's your money lending and escrow, all manner of other things. So next slide. We also have another speaker on the panel today. His name is Drew Boughton, just in case you weren't clear, he's the man on the right. So next slide. So what does the CFI do? So what we're here for is a resource for primarily entrepreneurs and people who want to be in compliance with the law. So we'll provide information, we'll answer any questions you have, and we'll assist applicants. And we will review your business concepts and business plans and provide technical, feedback. Next slide. One of the benefits of the CFI is that it's a one-stop shop for FinTech businesses. So you could potentially get bounced around in our agency before we had the CFI. If you had a business plan that crossed over various different technology or regulations. So it's a one-stop shop. So you can just come to us and we'll tell you where you might need to be regulated or licensed in what division. We also provide a holistic view of the proposed business and the product. We can kind of point out areas that maybe, maybe you didn't know this, but this is actually a regulation in another area, another space that maybe you weren't aware of. And then it's a fairly efficient way to communicate across the divisions, like I had said, and it's clear and easy access through multiple channels. So we have assigned office hours, and you can find those on our website. So once a month, we hold office hours. If anybody wants to join, they're welcome to sign up for office hours, and we'll meet with you and talk with about anything you'd like to talk about. Next slide. So what's going on behind the scenes? What we can do is we'll take, email, call, through office hours, and we'll coordinate subject matter experts to address the inquiry. So we'll get together and look at whatever the question is. We'll prepare a coordinated response. So it'll be a response, covering all the regulations that we think it would possibly hit. And then one of us will respond to an inquiry, or we'll hold a meeting with you if that's what you would like to do. So we have personal and direct communication with anybody who comes and talks to us and wants more information. Next slide. I wanted to highlight here for the group that we did relaunch. Well, we launched a website and then relaunched it again in December of 2021. The website has a lot of really good information. Nationally, we've been given a lot of kudos for our website. Other states want to basically copy the entire thing because it's very helpful for folks that want to get started in the space or already operating in this space but need more information. So the first thing we have is the licensing decision tree, which I'll go over in just a moment. We also have licensing and regulation guidance, which is extremely helpful for folks that just want what do these regulations mean? And then we have the timeline of regulation. That's where we've been posting a lot of the new developments are happening on the federal side. Typically, we'll also post things are happening here on the state level. Anything that has to do with financial regulation, for instance, we just posted the FSOC report that was issued, I believe, October 3rd on there, just as a resource for anybody who needs information on, what's happening right now or in the past. And then we have a glossary of FinTech terms. We have a guide for consumers and investors. And then we have, of course, a place for individuals to file a complaint if they have an issue. Next slide. So this is what the decision tree looks like if you were to go to our website. And so the way we regulate here at DFI is we regulate by activity. So if you're lending or collecting loan payments, you might be shuffled into one regulatory regime. If you're transmitting funds, if you're raising funds, et cetera. So in this case, a lot of people might be interested in digital assets and digital securities and digital assets, which is the green button. So trading, buying, selling, trading, and advising. And I believe, Brittany, you have to click next. Okay, next slide. So when you get through that button, you'll get to what kind of digital asset service will you be offering? Now, let's say that you're thinking of starting a business, you want to provide, information to people about what kinds of assets they should invest in. That might be the green button here on the right, financial advising on digital assets. So you'd click there. And it would lead you here, which is these are the regulations or the types of entities you might need to be licensed as. So we have here, the first one is financial advisors. That's regulated by the Division of Securities. Of course, everything is fact intensive, and I'm not giving legal advice here, but it just know that this is just a tool for you to use to see what regulations might be invoked. So financial advisors, and then also banks and trust companies can also participate in those activities. So that would be another option for someone who maybe wanted to do that. So with that, I believe that's the end of my slides. And the next thing we'll be talking about is digital assets and securities laws. And that is Nathan. Thank you so much.
Thanks, Ollie. So, when someone reaches out to the CFI and they start describing their project, the first thing I ask myself is, does this potentially meet the definition of a security? And more specifically, I ask myself, does what's happening here possibly meet the definition of an investment contract? And, an investment contract is one of the many instruments listed in the definition of security, along with stocks and bonds. So to figure out whether we have an investment contract, I consider the Howey test, which was a test first established in the 1940s by the US Supreme Court. And it's a test that's followed by courts here in Washington. I also consider recent guidance put forth by the Securities and Exchange Commission, the SEC, in 2019. And that's called the Framework for the Investment Contract Analysis of Digital Assets. And that discusses the application of the Howey test to digital assets. I also, think about the guidance that the Securities Division of Washington has put on the CFI website. There's not much difference there, but what I think that guidance illustrates is that the division very much is in agreement with the SEC when it comes to the application of Howey to digital assets. So next slide. But because Howey is the first thing I think about when someone comes to the CFI and wants to talk about their project, I'd like to tell you a little bit more about it today. The Howey Company was a company that operated citrus groves in Florida. Right next to those citrus groves, they also operated a hotel. So people would come to the hotel and look out over these beautiful citrus groves. And they were told that parcels of the land were for sale. And if somebody indicated an interest in buying that land, they were given a sales pitch. So if that sales pitch worked, the investor purchased a small parcel of land. The average parcel was a little over an acre, and most parcels were a row of 50 trees. So in addition to purchasing the land, the investors were offered a service contract by which an affiliate of Howey would be given a lease on the land and for a fee would cultivate the citrus grown on the individual parcels. So most people who bought the land also signed up for a service contract, even though it wasn't required. And that makes sense because the people who were buying this land, for the most part, they weren't farmers. They didn't know what they were doing. They didn't know how to harvest citrus. They were just people who had come to Florida for a vacation. So when the court in Howey looked to state case law preceding the enactment of the Securities Act of 1933, they looked at the preceding case law and defined an investment contract. And later cases have refined this definition to give us the following four-factor test. An investment contract is an investment of money in a common enterprise with an expectation of profits to come from the efforts of others. So next slide. Now that we know the elements of the Howey test, let's talk about why what Howey was doing met each of the elements. So the first element is easy. Investors purchase the tracts of land with just boring old money. For the second element, the court in Howey doesn't really speak to the common enterprise element other than to say what Howey was doing met it. But if we look to how Washington courts have approached common enterprise, we see that for the investors to profit, they are dependent upon Howey's success in harvesting and marketing the citrus. If Howey, harvested the citrus late and it rotted on the tree, there would be no profit. So we're looking for an interdependence of fortunes. For the third element, the expectation of profits, investors were promised a share of the profits, and were told that in 1 year, the profits of the operation were 20%. And then finally, the fourth element, again, the people who bought were not Florida residents, so they're not down there tending to the groves. They didn't have the knowledge or the expertise to harvest and sell the fruit. They were relying on the affiliate company to get the job done. So with all four elements met, what Howey was offering was an investment contract, or in other words, a security. So next slide. In the 70 plus years since Howey was decided, courts have refined the investment contract test and applied it to all sorts of different transactions. Although the court probably didn't guess we'd be sitting around today talking about its application to digital assets, they specifically attempted to craft a flexible test that was capable of adaptation, and it seems like they were successful with that. The SEC, as I said, provided significant guidance in evaluating whether a digital asset is a security with their framework. And I would highly recommend you take a look at the framework. We've also summarized the framework in our own guidance. But the framework notes that the investment of money element of Howey is typically satisfied in a token sale because the digital asset is exchanged for value, and that can be value in the form of a fiat currency, the value of a digital asset, or some other consideration. The framework also notes that the common enterprise element is typically met in a token sale because the fortunes of the digital asset purchasers have been linked to each other or to the success of the promoter's efforts. And then the framework spends most of its time talking about the expectation of profits and the reliance on the efforts of others, and discusses characteristics of a particular digital asset that may meet these elements. So I've just pulled a couple examples from my slide here, but the framework notes that when a digital asset gives the holder the right to share in profits, or if the digital asset is marketed as an investment, it may meet the expectation of profits element. If an issuer is performing those essential tasks of an operation, or if the issuer is establishing the market for those assets, it may meet the reliance on the efforts of others element. So next slide. So now that let's talk about some specific cases that applied Howey to digital assets. And because the framework focused on the third and fourth elements, I will also focus on those. With Munchie was a business based in California, and they created an iPhone app that allowed users to post photographs and review restaurant meals. Munchie wanted to expand their product, improve their product, and they intended to sell digital tokens to do it. And the digital token was called a MUN. The MUNs would at some point in the future be integrated into the application, so they could be used, they would be able to be used in the future for transactions like buying advertisements or selling food. Before the sale, Munchie posted a white paper on its website. They described how they were going to use the proceeds. They described how the MUNs would increase in value, and they described how they would facilitate a market, facilitate the trading of the tokens. So the day after Munchie launched the ICO, they got a call from the SEC and promptly shut the ICO down. And what Munchie was doing meets the definition of an investment contract. We have the four Howey elements met. When we look to expectation of profits, the people behind Munchie told prospective investors that the value of the tokens would increase as more people joined the platform. When we look to the efforts of others, Munchie had the knowledge and expertise to create their ecosystem, and they were in the position to create and facilitate secondary trading of the tokens. So although the purchasers would get to use the tokens on the platform at some point in the future, that first of all didn't exist at the time of the sale, and secondly, those were not the essential tasks of the operation. But if we change the facts a little bit, and for example, if every purchaser of a MUN was also required to help build the platform, maybe that would change the conclusion that was reached. So although a citrus grove, the sale of citrus groves and the sale of digital assets does not have much in common, the economic realities of those two transactions were very similar when you look at the Howey factors. Next slide. And then another instance in which the SEC determined a transaction involving digital assets met the Howey test was BlockFi. And in BlockFi, BlockFi was offering BlockFi interest accounts, or BIAs. And investors use these accounts to lend crypto to BlockFi in exchange for a variable interest rate. And I think BlockFi pitched that the account could earn as high as 9%. So BlockFi generated the funds to pay back the investors their promised interest in a variety of ways. They lended the crypto to corporate borrowers, they issued loans to investors, and then they invested in securities and futures. And again, the SEC and 30 plus state securities regulators determined that BlockFi was what they were doing met the investment contract test. When we look to expectation of profits, the promise of the variable interest rate would certainly make me expect a profit. And then when we look at the efforts of others, BlockFi exercised full control over the assets once they were deposited in the BIAs. They lent, they held, they lent, they invested the funds. Once the investor put it in the account, they were totally passive. So next slide. And so Howey, Munchie, and BlockFi, they were all offering securities, and all securities, traditional securities and digital assets that are securities, must be registered or exempt from registration at both the state and federal level. There are exemptions from registration that could potentially apply to the offer and sale of a digital asset, and some of them are listed here on my slide. And of course, registration is always an option. There is one token offering, INX token, that was registered with the SEC, and that offering was also registered here in Washington and about a dozen other states. So with that, I will hand things over to Devin.
Thank you, Nathan. So as Ollie mentioned earlier, I work for the Division of Consumer Services, and this is the division that is responsible for the Consumer Loan Act and the Uniform Money Services Act. I will briefly cover each, and first up, we'll talk about consumer lending regulation. Under the Consumer Loan Act, mortgages and personal lending, both secured and unsecured, are covered. What is not covered is commercial lending. RCW 3104035 states that no person may extend credit without obtaining and maintaining a license under the Consumer Loan Act, obviously unless you're exempt. So moving on, let's talk a little bit about the Uniform Money Services Act. Receiving and transmitting money or its equivalent value from one location to another location is considered money transmission. And unless an exemption applies, a license under the Uniform Money Services Act is required. So now let's put this into practice by looking at the next slide. The Division of Consumer Services regulates a number of activities that are currently conducted by companies using virtual currency in various applications. For example, under the Consumer Loan Act, lending fiat or virtual currency to consumers, whether they secure it or it's unsecured, will most likely require a consumer lender license under the Consumer Loan Act. Similarly, under the Uniform Money Services Act, the exchange of virtual currency for fiat currency or for other forms of virtual currency will also generally require a money transmitter license under the Uniform Money Services Act. The Uniform Money Services Act also applies to transferring virtual currency between wallets, even if both wallets are owned by the same individual, and holding a consumer's value in a custodial wallet. Next, I'm going to pass it over to Charles, our licensing manager, who can discuss a little bit more about the application process for money transmitters.
All right, thank you, Devin. Hi, yeah, so we're going to keep this pretty brief because it's not the most interesting part of this presentation. I'd start off by just noting out that registration with FinCEN, so that's the United States Financial Intelligence Unit, is not the end of a company's journey to operating as money transmitter. Money transmission is regulated at the state level in all 50 states, except Montana. Applications are received by us through something called the NMLS system, which is a system operated by the Conference of State Bank Supervisors to assist in the entire program here. Application materials are pretty extensive. So we look for information about the company in terms of its business plans, vetting materials for owners and officers. We review initial safety and soundness around financial documents. We'll review your BSA AML plan, sample receipts, and any number of other items that my staff will review and ask you questions about. Similar to entities seeking licenses, applications are all unique. We don't have a standard processing time. Some of them go pretty quick. Some of them drag out. It really is entirely dependent on the quality of the materials and the sort of speed with which required amendments are made. And my last little note here is that if you are an entity that is seeking licensure in more than 5 states at once, you might consider looking into the multi-state MSB licensing agreement, which is a multi-state program led by Washington State to sort of help to ease the initial license review process. It's a little bit too complex to go into here, but you can contact Devin or myself if you'd like to learn more about it. And that is the end of what I have to say about that. So you can contact the Center for FinTech Information. We have phone number, email here available. We're also on the DFI website. And as Ali said, we maintain office hours for the 3rd Wednesday of every month. We can also meet you at a different time if that would be more convenient. So thank you, everybody. That's it for me. And this, I guess, is where Drew comes in.
Yeah.
Yeah, all right. Okay.
Thanks, Charles. Sorry, doesn't look like my camera's working. So just a black hole, I guess. Anyway, I'm going to talk a little bit about legislation we have coming. We plan on proposing in the 2023 legislative session. We have 2 bills that we're looking at running. One is a update to the Securities Act that would create a whistleblower program that would provide awards and also protections to whistleblowers in that industry. The other bill is an update to the Washington's Uniform Money Services Act that Devin referred to earlier. Both of these bills are based on national model laws. Since many of DFI's FinTech licensees, including virtual currency companies, are licensed under the Uniform Money Services Act, I thought we should take a look at the background and intent of our update to that body of law. CSBS is who developed the Model Act, and it's a National Association of State Financial Services Regulators. CSBS works on policy issues, represents state regulators at the federal level, both with federal regulators and Congress. It also operates the national multi-licensing system that Charles has described, and supports a multi-state licensing and cooperative agreement among the states that was initiated and developed by DFI, and I think now has 31 states participating, which has made it a lot easier for businesses to get licensed in multiple states. CSBS promotes state-based financial services regulation and encourages states to arrive at a more uniform set of regulatory laws so that companies that operate in multiple states can have more consistent regulation and find it easier to comply with those regulations. Next slide, please. DFI is a very active participant, CSBS, at many levels throughout the agency. Most notably, perhaps, is Charlie Clark, our director, indicated there on the lower right. This is a screenshot. Is vice chair of the CSBS board of directors. Next slide, please. The Model Act that we're drawing from was approved by CSBS last fall. Next slide, please. And the model was developed at the request of and with the consultation with a financial industry advisory panel. So the panel asked CSBS to come up with model language and then work with CSBS on drafting a bill, circulated it for comment. And we came up with statutory language that everybody agreed on in 2020 throughout that year. And then the model was approved in August of 2021. And the CSBS in its statement about the bill says the model will establish a common regulatory floor for money transmission. Next slide, please. So this is a screenshot as well from CSBS's website. It's the companies that participated as part of the financial industry advisory panel that developed the bill. Many of these companies, of course, are familiar. Next slide. When DFI started looking at the model, we decided that rather than adopting it whole cloth, since much of our existing Uniform Money Services Act was consistent with the model already, we would amend rather than repeal and replace the bill. We did not touch the definition of virtual currency in the bill. We believe that the existing statutory definition is consistent with the model. Next slide, please. And there is the definition for those of you that are interested in such matters. Probably the most substantial change in the bill is changes to the approach to prudential standards involving the tangible net worth of a company. The Financial Industry Panel and the Electronic Transactions Association, which is their national trade association, urged CSBS to adopt a risk-based approach. And the Model Act does reflect that. So licensees, it's scalable. Licensees will maintain a tangible net worth of the greater of $100,000 or 3% of total assets for the first 100 million, 2% of additional assets for 100 million to 1 billion, and 0.5% of additional assets for over 1 billion. And this is the Model Act, and this is what we're proposing in our bill as well. Next slide, please. We do also place in the bill a reduced standard for licensees with less assets. For licensees with under $3 million in assets, or $3 million in assets, and with a total volume in terms of activity in Washington of less than $3 million in the previous 12 months, the minimum required tangible net worth amount would be $25,000. Next slide, please. Tangible net worth varies all across the country. As you can see, we're currently one of the lowest states with Alabama, Georgia, Missouri, Hawaii. Some states have really high thresholds, bars to entry. As you can see, it can be as much as $1 million in New Hampshire and Utah. We think that if states can come to an agreement about tangible net worth as a uniform standard across the country, it will make it a lot easier for businesses to scale up and operate in multiple territories. Even on the West Coast, California and Oregon currently have much greater tangible net worth amounts that are proposed in the Model Act. So we're hoping to encourage adoption of the model by moving it forward in Washington this session. That's all for my presentation, but we're all happy to answer any questions you might have.
Thanks so much, Drew, Ollie, and the rest of your team at DFI. We are happy to move into the question and answer portion. As we've said, please use the chat or Q&A functions to provide us with your questions. I am going to stop the share, and we already do have a question in the chat. So how do you see blockchain staking rewards falling under securities law? That's probably for Nathan.
Question. That's a great question. And I can answer that, but I will hand it over to Nathan, who is a securities expert.
So, so like a little background, in 2018, William Hinman of the SEC, he was the director of the corporation finance section at the SEC, in a speech suggested that Ether was not a security at the time he was talking about it. And I think it's important that he said in that speech, as I look at it today, because, things change. And then earlier this year, the now SEC chair, Gensler, made statements that suggest that the process of Ethereum staking rewards could change that analysis. And I think this highlights the importance of continually checking in on the economic realities of a digital asset, assuming that they change. A regulator does not determine whether something is or is not a security, and then that decision lasts forever. If the economic realities change, the analysis could change, and one could reach a different result. And it seems as if the SEC is suggesting that may have happened in this case.
Okay to jump in?
Sure, go for it, Joe.
So it's probably worth, I appreciate your thoughts, Nathan, and I agree with them that the Hinman speech isn't a replacement for the law. It is an interpretation given at a particular point in time about a particular set of facts. I am troubled a little bit by the idea, though, that one would focus in so minutely on staking rewards to extrapolate a more broad definition of whether staking, the word, the title staking equals security. The Ethereum platform and the tokens that are issued in Ethereum may or may not be securities based on this evolving thing of law. But as I view staking, it probably bears just to remind ourselves what staking is. And there's all kinds of different kinds of staking, but staking as in the instance that I think it might have been asked is the staking process in a blockchain that is a proof of stake blockchain like Ethereum, and there are other proof of stake blockchains, is an answer to the labor and cost intensive and energy intensive mining programs of proof of work blockchains like Bitcoin. In Bitcoin, the way that you validate successive states of the ledger entries as valid and immutable and never to be changed because they're accurate is by demonstrating that you've got a really great computer that solves a math problem reliably, and then you compete with other computers to prove you're the best computer at the deal. And then once you've won the mining competition, then your version of the new state of the ledger, along with the other 7 people who won the same competition, wins. And that's how successive states of the ledger are entered into the chain of blocks that makes a blockchain. Ethereum looked at that and said, we could do better than that. Rather than use computers competing in a proof of work scenario, a staking blockchain simply says people who have purchased or acquired or received or who have amassed a group of tokens can choose on their own to participate in staking consensus, which means that they will put up an amount of value that they're afraid to lose that's combined with their proposition for what the new state of the ledger should be. And the highest stakers win, just like the fastest computer in the proof of work wins. And so the game theory behind proof of stake is no one, and by the way, if the ledger entries that you present don't agree with the ledger entries of the other high bidders and they're wrong, then you lose your stake. So using a very simple example, let's say I'm going to participate tomorrow and I can't. I could go take Ether and I could go start staking. The current stake is high, and I'll just make up numbers. Let's say it's $1 million. No one would ever stake $1 million and lie. because the math knows you lied and the other people who are participating know you lied. And so, and if you lie, you lose your $1 million for nothing. You get nothing. So when I go back to Howie and the orange groves, the 3-part test, my personal belief right now, obviously untested and unconfirmed by the SEC, is that proof of stake in that context, meaning taking tokens and getting more ether in exchange for putting up some ether in the process of staking them on states of the ledger to consensus verify its accuracy, is my own effort. It's not the effort of others. And in that context, I don't think it triggers the Howey test. I don't think that makes the ownership of or use of Ethereum in the activity of consensus validating the ledger a security. If you're just buying tokens because they will increase in market value because of the value of the token in that ecosystem, that's a different matter. And it's the matter I think that Gensler is wrestling with. But I'm a little troubled by the idea that we've, in our headlines, tied whether or not Ethereum or Ether equals a security to the mechanism used to consensus validate blockchains of staking. I don't think those are the same thing. And something could be a security and also be used for staking in a way that doesn't make it a security. And something could be a non-security and be used for staking and stay a non-security because you're not using it for securities-like purposes. So I know that's a long answer, but I felt like it sort of bears separating the two concepts of staking for the purpose of running the blockchain, which to me feels like self-service, participatory, non-Howey triggering activity, and investors that go acquire tokens all over the place that maybe in some blockchain that they're just speculating on their increase in value. Very different activities and probably different regulatory treatment.
So Joe, I'm hearing there's probably nuances and it's specific to each particular token case. And so that's why having the direct conversation with the CFI and your legal counsel is probably the best way to go instead of assuming one way or the other. There are a lot of nuances in this space, correct?
Yep. Okay. The hype, the headlines that say staking, staking tokens are securities is very misleading.
Yeah.
Let's just say that.
I think it's also just helpful for context. We look at things when we receive complaints, right? So are we receiving complaints on staking for consensus? Probably not. Are we receiving complaints about I can't get my money back? Probably yes. So we come at it from a consumer protection angle, and I just wanted to share that with everyone, that is our perspective, and that's the lens we look at it through. So the way that enforcement happens is through generally complaints about people not being able to receive their funds. So that just might give some context there, but great comments, Joe.
And it kind of leads into one question that I had to kind of hopefully spark some of the folks in the audience who can please put in your questions in the chat or Q&A. So what is there an opportunity for or education that DFI can provide to Washington state licensees when a federal guidance or federal ruling comes out that might change what their activity is considered as there, recognizing that you can't provide legal advice or that sort of thing? What sort of assistance can you help Washington state licensees with?
I think that's a great question. So one of the things that we do is we follow all of these issues very closely. And like Nathan had mentioned, things change by the day. I mean, things change rapidly. And there are a lot of bills on the Hill, like in DC, that we have no control over. We are watching and we are monitoring. We are hearing things through our own partners, CSBS being one of them, and we monitor what's going on. And that's why the timeline is so important of what the things that we put on that timeline. That's the guidance. That's the straight up guidance that we get, that we receive, or we're collating all this information and putting it up for people for education. That being said, just as far as education goes, there are a lot of scams. There is a lot of fraud out there. And so one of the things that we really are focusing on this next year is providing more information. You know, senior centers are asking us to come speak to them about crypto. What is it? Everyone's trying, I need it. Should I get involved? There's so many scams out there. So that's just one of the things from the consumer protection piece, aside from the regulatory licensing examination stuff that we're really focused on. This industry is here. We want to make sure everybody's participating in a way that in a healthy manner, and that everyone has access to their funds when they need them, kind of thing. So I don't know if that helps. Does anybody else on the panel have any other things to say about that?
I do. I tell folks, yes, we have resources like the DFI and the CFI, but also reach out to your community before jumping in and, you know, dropping your life savings into anything. Reach out to real people that you know, reach out to your lawyer, reach out to the Cascadia Blockchain Council. We have a Slack community. We have lots of entrepreneurs and investors in the space. So talk to someone in real time, call them up, go meet with them face to face and talk about a token or a project you're interested in. And that's the way we can keep each other safe by, you know, just the human to human relationships, which is really, really important part of this community. Not everything that you read on Twitter, Telegram, Discord, Slack, I don't know, what are all the websites? Not all of it is true. So it's really, really important to go and talk to someone in real time, ideally in person, if not, you know, phone call, not just, you know, text messages. As you know, people don't necessarily read, and you don't know what else they're dealing with when they're tweeting or texting you back. So strongly suggest meeting in person or calling in real time to make sure you're getting, you know, that person's full attention, especially in something so personal. Can I ask a question? And folks, you know, please, you know, drop in questions into the Q&A or into the chat, or feel free to text me or email us. And, you know, we're happy to ask the question for you, because this is our time to make sure, you know, we share this information and share questions, because if you're thinking it, I'm pretty sure someone else is too. I have a question about DAOs, decentralized autonomous organizations. What is the thinking? Is there any sort of like, I guess, insights that you have around the space? I know like Wyoming, and I think it was Tennessee and Virginia. I'm not recalling my states off the top of my head, maybe correctly, but don't quote me, have done some DAO legislation or DAO work. Where are we in Washington, and how are we thinking about that?
I think that's a great question. I think a lot of that will fall to the blockchain group, to part of that coalition in the group. A lot of what you'll be doing is educating legislators on what a DAO is. You'll probably need to get through some other concepts before you get there. That's a more advanced. But yeah, I mean, I follow the Uki DAO CFTC, item that came out. And it should strike fear in the hearts of people that are engaging in DAOs, because they potentially are going to be held liable, potentially. But like, I believe it was Joe said earlier that it's really, we're bending sort of these theories. What I will say, in Washington, I don't know that there's any legislation that's going, and Drew could probably speak to this because he is our legislative person. I haven't heard of anybody running anything similar to Wyoming. What they did in that state was they changed their LLC laws to accommodate a DAO or DAO, which kind of is opposite from just being totally like not registered anywhere. So that's what they did. I'm not sure what the other states have done. I have not looked at that, but that is a possibility that Washington may want to, that would be like a corporation's type of bill if they wanted to do that, which we would not really have direct interaction with. But I have not heard anything, but I think one of the things that could come out of the blockchain coalition are any kind of ideas and amendments. You'll be direct, dealing with the legislators themselves and saying, hey, we should run something like this. So I don't know.
Yes, I'm really excited about the blockchain working group scheduled to launch this year. So we're really, I know that things are moving along, and we're about to imminently get that going. So super excited. There's a question that someone posted in the Q&A. Thank you, Brooke. He says, the education space is talking a lot about learn to earn models. I'm wondering now if any kind of token gifts to learners, like after completing a training model, would fall under money transmission laws requiring registration. Can someone help us answer that question live?
Yes, and I'm going to give the favorite answer that I think everyone expects to hear, which is it's going to depend a lot on the facts and circumstances of how you're doing it and what you're doing. So I can't necessarily give you an off the top of my head answer that yes, it's always going to fall under money transmission, or no, it's never going to fall under money transmission. We would definitely need to know a lot more about what exactly the tokens are for, and whether it is the issuer who is sending them to folks, or whether it is some sort of third party that's involved that's doing it. Just off of what I see here, I would say it's probably less of a money transmission thing and could potentially be more of a securities issue. But again, I am not a securities regulator, and that is not my forte. So not sure. But if anyone is interested in creating a model like that, then the CFI would love to hear more and would love to talk to you and get all those delicious facts that we can talk about.
Yeah, as a former operator, I think it's important for companies to draw out the process flows of systems and tokens and all the different parties that are engaged, and have a very clear idea of what's happening. And that's part of the nuanced discussion. So definitely reach out to the CFI, and also work with your legal counsel or your people in making sure that things are accurately displayed when you draw it up.
It's also in the chat, Brooke followed on and said, for an example, like if a school sends ETH to students for learning in a course, that highlights a really good nuance point that's worth making, which is if you're going to design your own, I mean, the question that was first asked in the Q&A sort of suggests you'd make up your own token and use it as a way of rewarding people, and the quick and dirty but the quick and dirty pivot point for me is that token ever going to leave a realm and trade elsewhere and have a fluctuating value? Those two things, is it outside your realm and does it have a fluctuating value, really are fulcrums for the analysis, and those are important questions to start asking. But if you're going to use someone else's token, like Ether or whatever token you choose, Dogecoin or something, right? If you're going to use someone else's token, just understand that you are importing whatever baggage that token has to yourself. So, for example, let's take a token, and I won't name one, but let's take a token that is a security or has been designated as a security. And then you start doling it out in this learn to earn model.
Oops.
You just got to ask yourself, I mean, frankly, the analysis is actually pretty simple. If it was Microsoft stock, how would you treat it? Right? And because it's a security. And so all the same kinds of restrictions and trappings that you have with traditional securities would then suddenly impregnate your model. And you've got a real issue there that you got to deal with just because someone else made the token and it has the baggage. And that goes back to Aries home base, which I appreciated earlier, which is that's when you pick up the phone, call your lawyer, because I wish these things were simple, and Devin's right, the devil's in the details. It really, really is super fact, super circumstance specific, which drives people bonkers. They're like, isn't there an easy answer to this? And the reason that I pivoted from my other practice to this is because there's not, and it's 10 years of not having easy answers that's made it so fun. But
I will add one thing onto that, is that you may have created a taxable event to that person you're giving. So it's not just you, it's who you're giving the asset to, so something to think of.
That's right. Don't forget about taxes.
well, and just a little note, like lots of tech companies are grappling with this problem as tokens become more movable on and off platforms. What used to be a pretty non-controversial model for things like YouTube and the stars, or World of Warcraft and their World of Warcraft money that was inside the game realm, all those formerly like pretty plain vanilla, non-controversial things. The minute you could move them off and start trading them and they changed in value externally, the world got super three-dimensional really fast.
True. I've sent out using the Lightning Network. I've used Satoshis to send to my students just to get them to open up wallets and stuff. So that's pretty safe, right? Yeah. Okay.
So on our internal calls, Ari,
Yeah.
at Perkins, whenever someone is like, oh, they do this.
Okay. Maybe I'll pause on the Satoshis for a bit here.
I'm just kidding.
Other questions, Q&A, or drop it into the chat, or feel free to raise your hand. I actually have another question. Just general trend observations that you have from the DFI perspective, from the pandemic, before the pandemic, post-pandemic. Have you seen any change of activity or kinds of companies or engagement, or just observations of what you've seen in Washington State? More complaints? What's it like? What's it been like?
Charles, do you want to start?
Sure. One of the things I do for the department is also to participate in a money transmitter regulator associations. I chair our licensing and emerging trends committee there. So that's a national group of money transmitter regulators that gets together quarterly to sort of discuss what's going on and what are we seeing and this sort of thing. Since, let's say 2019, I would say that in Washington State, our volume of money transmission license applications has increased significantly. I don't have a number, but I would say it's doubled, at least from the sort of annual volume we would see before that. We've seen an interesting bifurcation I think it's interesting, between I consider it sort of a weird technology split. Like in Washington, the majority of my applications at this point consist of either FinTech organizations generally involved with some sort of blockchain technology, either in payments, exchanges, and so on, or they are very small, what we consider traditional remitters, people who are sending money to Ethiopia, to El Salvador, to some other place. These are very small dollar items. I don't have like a middle anymore. I just have old school money transmission and whatever is happening in the blockchain space today. Speaking with other regulators around the country, it seems like this is largely what a lot of people's experiences are. I don't know what else I have to add to that. I would say that there's a big rush to market with fintech companies. So a lot of people have a good idea, an interesting idea, maybe something they think they can, fill in some value that isn't being provided elsewhere, but they don't. The business side of their business isn't built out. And as somebody who reviews applications for these, I have to say, like, I'm very small c conservative about things. We want to see real financial documents. We want to see a business plan. We want to see that there are actually officers in your company. And that's what every state's going to be looking for. I can't speak for every other state, but I'm kind of familiar with their complaints about the new sorts of applications we're seeing. So generally, we see more of a focus on the tech than the fin, I would say. And so it helps everybody to just have their kind of sort of business fundamentals in order before they approach the state for a license.
Right. And that's sort of the catch-22 or the plight of startups or entrepreneurs. You're very excited about a particular technology or idea, and off you go and build it. And it does take quite some time to really nail the product market fit and the business model. And if you're working in this new emerging space, especially with this, regulatory grayish space where there's a lot of nuances, it's really hard and challenging for most entrepreneurs. I mean, just startups in general, like 95% of them really struggle with this just from an investor perspective. And so, you know, I can see that being very challenging when trying to figure out how do I do this and how do I go out and try this out as an entrepreneur and iterate, but I don't want to, you know, I don't know how to start. So yeah, must be really cool. Do you think the doubling or the increasing of licensing requests is because there's a pandemic and people just had more time? They were in traffic every day, traveling from stuff, or like what was?
Maybe, I don't know about that piece, but you know what, the pandemic is pure speculation, right? I don't know, but a lot of people did have a lot of time on their hands. This is a new and very exciting technology. I can pick any channel of communication and learn about 16-year-old millionaires overnight, you know, so it's hard to see that the world is kind of burning around you, and maybe there might be some other option to get out there. I don't know, you know, we don't ask a qualitative analysis when things come in. People just send me their applications, but the volume increase certainly is notable and is not unique to Washington State.
Do you think also had to do with market prices like 2019, 20? I mean, prices really did go up quite a bit, especially in the cryptocurrency world. And now we're experiencing sort of the crypto winter, air quote. Have applications and have slowed down?
You think, but no.
Oh,
right now I'm averaging about 5 a month, which is a lot. I mean, it doesn't sound like a lot, but it's a lot. And it's a significant increase. Business models are becoming more and more complex. We are currently a big project this year, sort of behind the scenes, is to organize a licensing school for initial review of these more complex business plans across the states. That's ongoing, so I don't have a lot of details about that. Yeah, you would think it would slow down, but we don't. We still, the models tend to be roughly in the same, like I said, exchanges, payments are the majority. And then are just our traditional remitters who are always there doing their thing, you know.
Well, crypto winter is the time to buildle, right? BUIDL to
Charles, so between 2019 and 2021, as Charles has mentioned, that applications, the numbers of licenses issued by the area of the agency where he and Devin were doubled. So the growth has been stunning. And we're actually seeking, we asked the Office of Fiscal Management, Financial Management to allow us to increase staffing to try to catch up with some of this work.
Yeah.
One thing I wonder, and Charles, I'm going to ask you about this, is it because business is becoming more decentralized that we're seeing more people working from home, and there's no longer being licensed under a kind of a collective business place, but rather they're licensing their individual homes? Is that part of it?
It's I mean, possibly individual homes and all that's more on the other side of our consumer services. So that's more in our like loan originators not needing to be tied to like an office or something. For the money transmission piece, in Washington, we only license a main office and authorize delegates if you're traditional, you know, like a Western Union type or whatever. But the decentralization piece has certainly cropped up quite a bit. We see, you know, we ask company, where's your office? Well, yeah, why would we have an office? You know, but I've got to, you know, once my shop is done and we say, okay, you know, you're licensed to do business in Washington State, you're over to our colleagues in our examinations unit, and they've got to come out and look at you and your books and records and talk to people and interview them. And so we do see people using, you know, rental offices or sort of lease spaces. That's not across the different states universally accepted practice. In Washington, we're pretty confident that we can get what we need to see from people, and we, you know, companies make them available for us and so on. But across the board, it's not 100% And what was the other? I'm sorry, Drew. I thought of something right as you started talking, and now it's.
I think another thing too, just to go along with this, is there's been a lot on our side with education and outreach on what is required, and so that may be driving it as well. So folks that were not regulated or just operating potentially realized, oh, we need to go to DFI. So that could be driving some of this as well.
Oh, you know, I had one last little pitch to throw out there, is that some of these big cultural events that we've all experienced, state agencies are not immune to them. So the Great Resignation has cost some of our sister agencies quite a bit of staff over the last years. People move on, you know, there's pandemic, maybe you want to do something else with your life, who knows? But it affects the amount of time it takes to review a license. So what you're running into, especially smaller states than Washington that don't have the kind of resources we do, have effectively one person to do what I have a staff of 2.5 people for. So, you know, be kind. I guess is my I implore you when you reach out to some of our other states, be patient.
Well, and I want to just highlight what Ollie said about, you know, since you all have started the CFI, you know, I really hope that the increased communication opportunities and access that the industry has to you all as regulators, as educators, as folks who are just really knowledgeable about what these processes are and how to make sure folks can be compliant in a non-enforcement way is really a good opportunity. And we, you know, truly appreciate the work that you have done to make sure that this partnership moves forward and is something that is beneficial to the industry and the sector here in the state. So.
Yeah, we have to remember behind every email and behind every tweet and every document, Excel and business plan is human beings. And so if we remember that we're people first, it's a lot easier for us to engage and build relationships and figure it out together. More questions? I know there's more questions. I'm gonna check my phone. Otherwise, we know how to reach you. Check out the Center for FinTech Information website or the DFI website. There's real human beings working in our state on our behalves, keeping consumers safe, but also, you know, trying our best to make it easier for entrepreneurs to build and investors to invest, and, you know, growing our economy and enabling jobs and just allowing this innovation economy to continue to grow and flourish.
Thank you again to our sponsors, Core Cronin and Perkins Coie. Thank you to the whole team at DFI for taking the time out of their busy days to speak to you all. As Ari said in the chat, this recording will be available soon and will be posted on our website. And we really do appreciate all of your time and look forward to the next event.
And thank you, WTIA, for hosting this event and bringing us all together.
Thanks so much.
Thank you.